Welcome to NREI's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at NREIonline.com. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. Today we're going to be covering more top stories. Good afternoon, David. How are you?
I'm doing well this week. How are you?
Doing great. And I know that we've got a bunch of stuff to cover today.
Yeah.
What do we want to start with?
So, wanted to actually focus a little bit on updates of things that we have been talking about, and just to some of the latest developments with those. So, a couple of things is that the Fed, probably the biggest news, not just for commercial real estate, but for investment in general, is the fact that the Federal Reserve cut rates again this week. Yeah. So I wanted to just talk about what that might mean. Then WeWork, which we've spent a lot of time looking at just because of all the buzz around and all the questions. And as we even contemplated last week, they have decided to postpone that IPO. Mm-hmm. So I wanted to just kind of just touch on that for a little bit. And then after that, we had a story that I thought was really interesting about what some online subscription services are doing now to establish brick-and-mortar presences, and there's just a lot of really interesting examples that we could talk about. And then then there's a couple other sort of bullet points we might hit, but that's kind of the highlights for today.
All right, sounds good. So we're going to start with the Feds cutting some rates. And obviously that's good news for, I would say, most people, most businesses. But what does that mean for an investor?
Yeah, so obviously this is now the second time that the Fed has cut rates after we had interest rates at basically 0% for a long time, and then we had this very gradual process of rising rates back up as a way to with all the growth that was happening. And now suddenly, questions about a recession or other warning signs, mm-hmm. we see the stimulus happening. So I think it's interesting how quickly the gear shifted. This is now a 50 basis point cut from where rates were. So specifically for commercial real estate investors, we always look at what the way that the Fed rate plays in is on both the debt and equity side, because on one hand it lower interest rates lowers the cost of debt, which is very, very obviously very important for any investor that's leveraging their investment, and real mm-hmm. estate is a highly leveraged business. So we have that, and then on the flip side, what it means is that as an investable asset, often real estate is benchmarked against the spread on cap rates to where Fed rates are, where Treasury rates are, is often a gauge of whether people are going to make a decision to continue to invest in real estate or not.
Yeah, absolutely. And I mean, it does affect it in different ways, David. But what do you think the reaction is going to be? I mean, is this honestly, is it going to be something where people are actually going to start to make different moves as opposed to last week?
I think that it probably extends we're in this long-term growth cycle, probably the longest real estate cycle that we've seen in a long time. Mm-hmm. This provides some more room for growth. I don't know if it's going to have the impact of somebody that wasn't going to do a deal yesterday is now going to suddenly make the decision because of this 25 basis point spread. But I think it does give some, if there were some people that were feeling some caution, which I think we have talked about, yep. This will ease some of that caution. So maybe somebody was thinking about a deal, and now this will put a little bit more weight on the side of, okay, I feel okay moving ahead with this deal. My cost of capital may go down, or the return I'm going to get is more attractive, looks more attractive relative to the alternatives. And, so there, it just so I think it feeds into, I think the rest of this year continuing to be a good, a good period for commercial real estate. So that's like my thinking, and that's sort of like what I think most of the and that's based on what we're seeing from the commentators in the market, from the people that are measuring investment sales volumes, from the brokerage firms. I think that's generally the consensus, is that, I don't think it's not necessarily like, oh my God, this suddenly change, but like it's going to open the floodgates and we're going to see a bunch of deals announced in the next week that weren't happening previously. But I think it will address some of the feelings of hesitancy and caution that we've seen all sorts of evidence of in the past 6 months.
Yeah, I agree. I don't think it really will affect deals that could have been, or maybe, just kind of on the fence thing. But what I'm hoping is it pushes those people that were hesitant to even go look for possible properties, possible investments, to say, you know what, I'll take a look. Just so those folks that were just kind of wishy-washy about it, maybe that'll push them to actually be more active in seeking out those investments. That's my thought, but I don't know.
Yeah,
we'll see.
No, I think that's right. And I think because it does have to do with, like, if the cap rates, because there has been the compression in the cap rates, but now you can think about buying at that cap rate if your cost of capital is less. You don't have to wait for prices to cool down, because you're going to get a better return because your cost of capital is less.
Yeah, absolutely. And now I know we've talked a lot about WeWork, right? And that's the next story that we were going to cover, and more of an update. You said they postponed the IPO.
Yeah, which I think we did raise as a possibility last week. I think nothing changed fundamentally about what we understood, but I think everything that we had been pointing to, that the market had been pointing to, the questions that
do you think that's why they
potential investors were having for them?
Yeah. Do you think that's why they postponed it, is because of the concern about profit and all that stuff that had come out recently?
Yeah. I think the questions about it's very clear. The questions about its profitability, the fact that the valuations that people were the valuations that people had of the company had declined so dramatically from where they were when the IPO was first being considered, and that was based on their financial filings, that was based on their roadshow and the questions, based on the concerns about the corporate governance structure and just like how much control were shareholders going to have compared to the CEO of the company, just based on some of the weird things they were thinking about doing. All of these things just kind of came to a head, and I think it became very clear that if they proceeded with an IPO, they weren't going to get the pricing that they, had thought they were going to get at one point. And so now, I think the next question becomes, what they said is that they're just postponing it for a month. They're going to go back and try to address some of these concerns, and then do the IPO, in October. The question is that really the timeline, or could it be postponed further, or does this kind of change everything?
Yeah, and that's, you always have to wonder in the back of your mind, are they just saying that to appease people? Like, oh no, we'll just do it next month. It's fine, right? I mean, it's just kind of dismissive. Whereas, we don't see it, but in the offices are like, holy crap, what are we going to do? Stuff's on fire. I have no idea. But since we don't get a chance to look into those offices, to be in those meetings, we can only speculate. We can always only give our opinion. But speaking of, what is your opinion? What do you think is going to happen next?
I mean, I've purely opinion based on no insight as to no additional insight beyond what we've already talked about the company. I'm skeptical that we'll see an IPO next month.
Yeah, I'm wondering if it's we're going to do it 2020. It'll be a good launch in 2020. That's what we're waiting for. All right. Yeah.
And I think, it could also, the other factors, of course, what the markets are like in general, whether they're conducive for IPOs in general, in addition to this specific IPO. But I just feel like there's been, the process of a company going public just shines, you could have a certain narrative about yourself when you're able to not show your books, and you can create this mysticism or mythology, probably a better word than mysticism, create this mythology about yourself, create this story about yourself. But then, IPO is a cut and dried process that's going to be based on your actual fundamentals and your actual, what's the structure going to be? What are the shareholders going to get how are you going to deliver back to them? And I think it just seems like trying to go through that process, it's really shed a lot of light on some issues.
Yeah, it's kind of like Instagram influencers. It's come out so much that they all Photoshop, or not all. I'm not going to say all, but most of them Photoshop their photos to where their bodies are completely different, the backgrounds are completely different. They put flowers in and mountains and things that don't even belong there. Oh, look where I'm at.
Right.
Yeah, you can really do some amazing things if you have the ability to create your own narrative or create your own picture of what the perfect situation is. So, yeah, it'll be interesting to see how that plays out here in the next few months.
Yeah. So, and I feel like we've been talking about them in a lot of the episodes, so hopefully we can have at least a few weeks before we have to come back to them.
Wouldn't that be nice? Yeah.
Yeah.
So speaking of moving on, we've got, you had talked about subscription-based retailers and kind of going toward physical store locations, which seems counterintuitive to what is happening to all the big box stores or the brick and mortar stores that are being beaten by online shopping. So tell me about this.
Yeah, I find this to be it's a pretty interesting trend, and it's not like just a one example. There are several examples of this. Companies that the subscription based model for all sorts of goods has become very popular. Where like you get something on a monthly basis or a quarterly basis or just on demand. But I think one of the things they have in common is just this overall brand aesthetic that they often have. A lot of times there's an app involved. It's very, but it makes it just very easy to kind of sign up for this thing, forget about it. But then every month you get this nice box that's got like, certain whatever you happen to subscribe to. I happen to actually do a couple of subscription services myself. I do like one of the razor companies. So I get like those blades, get my blades every couple months. Those come in. And I also do one of the toothbrush ones. So then they send, it's electric toothbrush, and they just every 6 months they send me the new toothbrush head and the battery. So, I mean, I've personally found these useful. Neither of those are the companies in the story, but that's the business model.
Yeah, I've gotten the razors. I'm right there with your razors. They were fantastic, but I got so many of them so quickly I stopped the subscription because I had enough for a full year without them sending me any more for a month. I don't shave that often, David. I would just be honest. So yeah, but no, it was a great situation because right to your door, and it was a lot cheaper. So I get that, but some of these other ones, and I want to clarify something in the article. I was just kind of perusing a little bit. It says in here, Birchbox, which is a company I've never heard of, but Birchbox, second brick and mortar store, opened in Paris in 2017 after a number of successful pop-ups. What are pop-ups?
Oh, so pop-ups are basically like a temporary store that you may operate for 6 to 8 weeks. Often seasonal. Okay,
so in one of our previous podcasts, you talked about that maybe that type of situation, they were inside another store for a limited amount of time. So that's what a pop-up is.
Yeah, basically. So it could either be either within another store or even in an empty store, or in a common area space,
like a kiosk or something.
In a mall, something like that. So yeah, temporary tenant. Historically, kiosks, temporary tenants, pop-up stores. That's kind of a certain class of retail leasing. And it's a good way to test a concept, or a good way to kind of, do some in-world marketing for your service. Now it seems like what some of these companies are doing is even the next level, which is actually opening full stores. But I think to answer back to your original question about or the original idea of whether this is a contradiction between, all the struggles we've seen in the retail world at the expense of online retail. I feel like this is basically what this is about is the subscription services that have been successful at building a customer base are now looking to extend that even further and see a value proposition in having a brick and mortar presence where potential customers for their service can come and see the stuff, get a better feel for it. So Birchbox is a beauty and cosmetics monthly box that you get. So you get samples of makeup or skincare, that kind of thing.
Okay.
So that comes out every, so that's what they are. So I think in their concept, it's going to be a store where they have examples of the kind of stuff that would normally be in their monthly box, and you could even put one together for yourself right in the store, and then sign up for the service to get more of them down the line.
Yeah.
So that's what they're doing.
Okay. And this makes perfect sense to me, because if you think of it, it's the exact opposite of how the brick and mortars had to start. When it was Sears back in the day, or Walmart, Target, they had to go into a location, their first location, build themselves, right? And then get enough consumers to justify opening another store and then opening another store. And they had to do that for branding purposes, for marketing purposes. If you want to be well known, you've got to stretch out, right? You have to stretch out and get into different locations. Where these folks have already built an online influence. They have enough consumers that have said, yes, we like your products. Yes, we like your service. We're subscribing. Now they can pick and choose where they want to open, and they don't have to worry about continually trying to open more stores. They've already got their store situated online, right? I mean, that's what they really want. So they can be very choosy where they have very specific stores. So it almost becomes a treat to go to, one of these places in, physically, to be able to go to the store and see how it is, instead of, just being in every town. Well, I know if I drive 2 hours from here, I'm going to hit at least 17 Walmarts, at least, right?
Right.
They don't need to do that.
Right. Yeah. And I think, I think importantly, it is because since the core business does remain, that they are an online retailer that is shipping out this stuff every month, but this is about consumer acquisition. So, and it's about, I think for the most part, where you're going to see these kind of stores for these kind of retailers is going to be in very high traffic downtown kind of areas, touristy areas.
Yep, exactly.
Possibly very successful malls, but and to get in front of people that may not find these services where they have established themselves, which may be, podcast advertising or on Instagram or some of these other services, there's certain consumers who are not there. So if you want to extend your reach beyond that core audience, it's, a store is as a way to do that.
Yeah, absolutely. Absolutely. So what are some of the other stores that you've seen do this or are in the report itself?
Yeah, so in addition to Birchbox, another example is Rent the Runway, which is best known for renting like designer dresses or for special events and formal occasions.
Okay.
So they're going to open a showroom in San Francisco.
All right.
In addition to them, you have a company called Fabletics, which is co-founded by actress Kate Hudson, and they're an online subscription retailer that sells women's activewear. So they're also opening a flagship store, or in this case, a pop-up store that they're going to do in Soho in Manhattan.
All right. So you said it's a subscription for athletic clothes?
Yeah.
Okay. Interesting.
Yeah.
I didn't know they wore out that quickly.
Well, I mean, maybe it's 6 months. I don't know.
Well, mine don't. Let me put it that way. My workout clothes I've had for a number of years, probably because I don't work out a lot. So maybe the people that do work out, they need new clothes every 6 months. So,
and there's also athleisure wear, like where some people like wear this as fashion now. Like there's a certain fashion, like it's not just for the utilitarian. What you and I might be doing with our gym shorts.
Well, no, I'm wearing gym shorts right now. So, I mean, it really, I just want to be comfortable. So, yeah, no, I totally get that. So would you call it sports leisure? No, sport leisure? What'd you?
Athleisure.
Athleisure. I've never heard that word before. That's fantastic. Athleisure wear. I'm gonna tell my wife, hey, can you pack my athleisure wear? We're going to Mexico, so I need to make sure we pack on my athleisure wear. And she's going to slap me. I'll tell you that. I'll try to record it for you. Man, okay, but that's interesting.
That's like the Lululemons. Like where like people wear Lululemon. They don't just wear it at the gym. You wear it everywhere. Yeah, so it's just become like acceptable to wear. So I think that could be part of it too. That there's almost like a fashion dynamic to athletic wear now.
Yeah. Okay. Now you're taking me back to junior high when, there was a period of time where we all thought it was okay to wear spandex to school and such. Yeah.
Right.
Yeah. Just, it was wrong then. I think it might. Well, anyway, we'll just move on.
Yeah.
Any other stores that we need to highlight in that list, or are we moving on to another piece?
Just two more quick examples. One is Frank and Oak, which is a men's clothing brand, and they have now, they're up to over 20 locations, but they started as online. Mm-hmm. And then perhaps like in one of the more curveball examples. So like for the most part, these are all like subscription service, opening a pop-up, opening a real store, opening 5 real stores.
Yeah.
The most curveball example is La Tote, which is an online women's clothing rental business, which also uses the subscription box model, has actually acquired Lord & Taylor's brand and inventory. So as a way to kind of help extend what they're doing, that's a particularly interesting example of how these companies are evolving now. Like they're to the point where they're buying an old line successful brand like that. Yeah.
I saw your list when you were, you sent over some notes, and I saw that on the list. I always thought La Tote was a suitcase or a bag company. I did. So when you said it was women's clothing rental, okay, interesting. All right.
Yeah.
So what's our next piece we're covering today?
So the other thing I just wanted to touch on quickly without going too in detail, but just wanted to promote basically, is that we had a really good interview this week with that talked about in some depth about the possibilities of what should happen with Fannie Mae and Freddie Mac in terms of the reforms and the potential privatization that's being talked about. Walker and Dunlop's chairman and CEO Willie Walker spoke with one of our reporters and just gave us a really good interview that I don't think I could do a justice to trying to recap. Right. So I think that would be. I just wanted to kind of give some extra promotion to that as a good piece that people should check out.
And that's on NREIonline.com, correct?
That's correct.
All right. Great. David, I know those were the main headlines that you wanted to cover today, at least the main stories that we wanted to go through. But there are other stories that you guys covered this week. Do you mind if I go through those headlines real quick?
Sure, go ahead.
All right. So make sure you go to the website because they covered a lot. So PREA survey that continues to show expectations of moderating growth. Another article about asking the question, are California commercial real estate investors going to the Midwest in search of higher yields, which being from Omaha, I kind of can see that happening. The next article, multifamily investors spooked by tougher laws are pushing cap rates higher in markets with rent control. Did that have anything to do with we're coming on October? Using that terminology, spooked by tougher laws like Halloween? No? Okay, I'll just move on. No. All right, just checking. We never know. All right, and then the last one is, does the spike in net lease office acquisitions signal waning confidence in economy? So there's 4 more headlines that if you're interested in any of those, make sure you go to NREIonline.com. David, any bits and pieces from those 4 that you want to touch on?
Yeah, 2 very quick takeaways. One on the Prius survey. That's just a good article that's based on this quarterly sentiment from some pretty big investors. Mm-hmm. And it showed, although while they're seeing slowing growth on potential returns in the next few years, their sentiment shifted up slightly from the last quarter. So it's kind of like a mixed message where, growth, they expect growth to slow, like annual returns to slow, the pace of annual returns to slow a little bit. They actually were slightly more bullish than Q2. Yeah. And then also for the other one, the multifamily stories, I thought was a very interesting breakdown because like there are a number of markets that have had some recent rent control measures put in place, and this was based on a study that RCA did that kind of tried to capture how that's influenced buyers' decisions, since obviously rent control is going to mean rents growing slower or not at all. So therefore, what does that mean for cap rates? So it's a good piece to look at.
All right. Well, thank you, sir, for all the good information this week, and I wish you a happy Friday and have a great weekend.
All right, you too.
All right. And thank you all for listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues. Again, thanks for listening today. For everyone at NREI, this is Aric Johnson inviting you back next week for all the news that matters to you. And have a great weekend.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of NREI or Informa. The content has been made available for information and educational purposes only.